Hi and welcome to the 11th issue of my newsletter. Today we will cover the top 4 Japanese candlestick patterns which I love very much and which mean a lot. Japanese candlesticks are not just patterns that appear on your chart for no reason. These are candlesticks that represent the market behavior and the psychology behind it. It's a story that the market, the price, the chart tells you the fight in between the buyers and the sellers, the bulls and the bears. So every trader, from my point of view, must study at least the basics and the most popular ones. It will help a lot. So there are in reality too many candlestick patterns, but in this video I would like to cover only the most important and most profitable in my point of view. They will become part of the foundation of your trading simply because they work. We will cover engulfing, maru, buzu, equal shadows, equal tails, doesn't matter how you name it, the hatchet, and in the end you will get wonderful gift, which is my ebook called The Secret Meaning of Japanese Candlesticks, both part 1 and part 2. You will get both ebooks. So let's start without wasting a great time. First of all, quick review about the candlestick. Okay, so as always, before we move on, it is very important and essential that you know the composing parts of a Japanese candlestick. So we have upper, shadow, tick, spike, tail. I have so many names for that, and it doesn't really matter how you name it. Just remember what it means. So we have the upper shadow, the body of the candle, and the lower shadow. For a bullish candle, which means buy, okay, it normally of course appears as green, we have the open price somewhere, low price, high price, and close price to be higher than the open price. That means that during this time period, 5 minutes, 15 minutes, 4-hour chart or day, every candle represents the very specific time frame you analyze your chart. So if you analyze 4-hour chart, every candlestick or a bar, in other words, will represent 4-hour chart. So this is the body of the candle and this is the shadows of the candle. The bearish candle, exactly the opposite. It opens here, goes high, go low, and closes somewhere here. Close is below the open price, means that the sellers were stronger than the buyers, therefore they took the prices lower. Engulfing pattern is the one where the engulfing candle lifts or swallows entirely the previous candle, as you can see here. The body covers the previous body, the shadows covers the previous shadows. In this example we have a bullish engulfing, okay? As the pattern candle is bullish. Normally it will be green, but on some charts you will see that as blue. It doesn't really matter what color it is, the most important you understand what it tells. So this is very strong and reliable at the end of a trend, move, and so on. Okay, we cannot rely on candle patterns or anything else inside very tiny range. We will have to look for trends, corrections, clear moves, and once pattern appear at the end of clear move, we can use it. And this is how it looks like on the bearish side. Okay, we can see that the body of the red candle engulfs, covers the entire candle before the bullish one. Body to body, spikes, shadows to shadows, so on. That's all. At the end of bullish move, it's very reliable, strong pattern. That's how it looks like in reality. And this is a bullish one. So how to trade the engulfing pattern? Engulfing patterns are great to spot reversals or trend continuation if it's the end of correction. Many times, the end of a trend, we will get an engulfing signifying the power of either the bears or the bulls. So once we get an engulfing, we can use it as an alert to close our running trades or collect profits from the trades, partial profits from the trades. While it's suitable, we can also enter the opposite direction, but keep in mind, pattern by itself is not entry rule. You have to combine it with your strategy, your analysis, your trading plan. Now, let's check out the next one, which will be the Marubozu. Marubozu stands for a candle without wicks. That's the power of it. There are three types of Marubozu patterns: complete, opening, and closing. Let's quickly cover them. The completed Marubozu means the open price and the close price also play the role as high or low. Okay, so the close is also the high, the open is also the low, open is the high, close is the low for bullish and for bearish accordingly. Opening Marubozu, this candle pattern does not have a wick on the side where it opens, okay, but on the close side it does have one. So if it opens right here on the bottom, there is no wick on below, but the close price, above close price, there will be small wicks. That's why it's called opening Marubozu. Open without any spike or shadow above, closed with a small spike, that's an opening Marubozu. Closing Marubozu is going to be exactly the opposite. Once we have open, okay, we have a wick below, but the close for bullish candle would be as a high, and for bearish candle, close would be as a low, while above the open there is a shadow. How we use Marubozu patterns? Marubozu patterns are extremely strong trend reversal signals, again, or continuation after correction, as well as continuation patterns. As I said, if you see a Marubozu close candle at the end of an uptrend, it is good idea to collect profits and get out. That could also be sell signal if it comes again together with confirmed analysis from your strategy or trading plan. Like you see in this example, that's a close Marubozu, no wick below the close price. That's a very powerful one. This is an example for close, but it's almost full, complete, but we see small wick below, so this is a close Marubozu. Next one is equal shadows, one of my favorite. This pattern indicates the current forces on the given market. If a red equal shadows pattern appears, it is very likely that the market will continue lower. If a green equal shadows is formed, we are most likely to see continuation up. So why and how this happens? What are the forces and psychology behind this outstanding candlestick pattern? Let's have a look and we understand. That's where we got, okay, the opening price. The bulls show their interest in the currency or any financial asset, so they reduce the prices deliberately, right to here. The price is good buy area. Okay, they push it, the bulls increase the price enough, and now it's the right time to enter other bulls to the market, or at least to confuse the sellers. So they release it a bit, it's pulling back a bit. Bears might think, alright, bullish power is over, and boom, that will be exactly the opposite, as it will rally. One more important thing, the wicks should be as small as possible compared to the body, and body to be as big as we can, like in this example. Okay, very big body, equal tails right here, end of correction. This is a strong downtrend, end of correction, great pattern. What else can we ask for? Great sell opportunity. Here is another example. Okay, great trend. We have a great body here. It's also like almost an engulfing, right? Just the shadows don't follow. And the shadows are equal from top and bottom. Really great one. It's also operated like a attempt to break higher above this place and fake opportunity. Really strong call from the bears, the sellers. Once you finish with this video, it's a good idea to open your chart and practice to spot all these patterns. They are extremely powerful once you master how to use them. Now the last one we have is the hatchet. Very powerful one. Looks like hammer or inverted hammer. The only difference is that the hatchet has no wick from top or bottom, and its shadow to the opposite direction is huge, very big, indicating very serious power of the bulls like here or bears like on the bearish candle. It is important to mention that this pattern is very accurate when it appears at the end of a trend or end of correction. If it appears in the middle of a range, of course we cannot have any decision based on that. So why this pattern is so reliable, even more than the hammer? This pattern shows us the following. When the candle opened in this down move, the bears were in control, right? That was creating very serious drop down. Naturally, they try to push the price lower, like we can see by this low. However, bulls managed not only to hit back and push the price higher, they even managed to make the highest point of this candle its closing level. Great indication bulls are here to control. And one more example of a bearish hatchet, as you can see right here, after the strong up move, bears took control dramatically, close price equal low price. Amazing call for a sell. That would be all for this video. Please don't forget to download the secret meaning of Japanese candlestick, both parts, part 1 plus 2, both ebooks. You will enjoy it, and of course you are invited to leave a good feedback, any feedback. Of course I will enjoy the good feedback for my own motivation to keep working hard for you. And that's basically all. That's our contact details, right? Information. This is my Skype. The email below is support team, as you already know. Feel free to contact us for any issue. Thank you very much for your time watching this video. I'll see you again on the next issue. I wish you best. Vladimir Ribakov.